Earnings alert! FedEx is set to report their fourth quarter earnings after the close on Thursday, June 23rd, and investors await in anticipation. There has been a buzz of anticipation as several major analysts have just now adjusted their target price for FedEx, but maintained their bullish buy recommendations. Will FedEx meet earning expectations and provide good guidance moving forward? Or will they take a swing and a miss due to inflationary headwinds? Hello and welcome to Stock Market Fever. In this video we will analyze and evaluate FedEx to see where they've been, where they are now, and look at where analysts forecast they'll be going in the future. And you want to be sure to stay tuned to the end as we at Stock Market Fever wrap things up and provide our own forecast for FedEx. To begin with, let's look at FedEx revenue. Over the last 3 years, FedEx revenue has been on the rise. FedEx revenue totaled $69.7 billion in 2019 and took a small dip to $69.5 billion in 2020, when America and the world were shut down due to COVID, exacerbating supply chain and shipping problems. But then, as the world reopened in 2021, so did FedEx's revenue gates, and sales leaped up to $84 billion. But revenue is only half the story. To truly understand and evaluate a company, we must of course look at their earnings. And here the story is bullish as well. FedEx GAAP earnings have grown from $1.75 a share in 2019 to $4.90 in 2020 and soared to $18.44 in 2021. And with those increased earnings, FedEx share owners were richly rewarded. At first, if you had bought FedEx shares 3 years ago, you'd be up about $66 per share for a 40% cumulative return. But if you bought FedEx 1 year ago, you would have paid about $304 per share and would now be down about $67 per share for a loss of about 22%. Ouch. And if you had purchased FedEx at the beginning of this year, you would have paid about $265 and seen your shares go down all the way to $200 per share before bouncing back up to $230 after they announced their increased dividend last week. But with trailing annualized earnings of $18.14 per share, is FedEx fairly valued at $230 per share, representing an over 12 times price earnings? To help answer that question, we can now look at how FedEx is priced in comparison with their peers. And the peer that comes best to mind is United Parcel Service, UPS. Priced at around $175 per share, UPS is trading at around 14 times earnings, compared with FedEx trading at a bit over 12 times earnings. And as to earnings growth, analysts anticipate that FedEx will grow about 12% a year over the next 3 to 5 years, versus UPS 14% anticipated earnings growth. So based on financials, it seems that FedEx is trading around par with its rival UPS. Let's look now and see what industry analysts have to say. Wells Fargo analyst Allison Polniak-Cusick believes this price is justified and has an overweight buy rating for FedEx. She observed that while there are concerns about headwinds from the overall economy affecting earnings, FedEx will be rewarded with important increases in freight charges from their shipping customers. And thus she expects FedEx to beat the $6.95 per share for their fourth quarter, providing short-term lift for the share prices. And Zacks was equally bullish on FedEx shares. They observed FedEx announced only last week that it will be boosting its yearly dividend by a whopping 53% to $1.15 per share, shocking the market. They considered this to be an unquestionably shareholder-friendly decision that investors should applaud. It would seem that they wouldn't have declared the huge dividend increase unless the company earnings were on the rise. And while other analysts have been busy lowering their target price for FedEx, they remain overall bullish on the shares, maintaining an average target price of $277. So after all is said and done, where does stock market fever stand? What is our prediction for FedEx stock moving forward? We'll be glad to tell you in a moment, but if you like this video and would like to see more like this, please click the like button and subscribe to receive future stock market news, analysis, and alerts right here at Stock Market Fever. Thank you very much. Okay, back to our forecast. While we do not offer investment advice, we gladly offer our opinion. And in our opinion, the shares will trade higher than its current 230, perhaps rising to 265 over the course of a year. We believe that FedEx will increasingly improve their execution and on their 5% operating margins, but not by much due to inflationary headwinds. Thus, in our opinion, FedEx shares are a hold, as the company will continue to grow through tough inflationary times, but wouldn't rate it an outright buy due to the longer-term risk of a mild recession eating into profits. This is what we believe, but what do you think? Where do you think FedEx is heading in the short run and long run? Would you recommend buying, selling, or holding, and why? Please leave your thoughts and comments below, as we'd love to hear from you. And please be sure to like and subscribe to Stock Market Fever for future actionable stock market news, analysis, and alerts.